Silicon Valley may be at a turning point. The number of deals are falling, and the majority of venture capital is not going to the newest players. What happens next was a big topic of conversation at the TechCrunch Disrupt conference. Julia Boorstin has more tonight from San Francisco.
This year's TechCrunch Disrupt brings together 500 startups competing for investors' attention at a time when it's increasingly tough for the little guys here to take their business to the next level. Venture deal volume declined in the second quarter, and though overall venture capital investment rose slightly, the majority went to private giants such as Uber and Snapchat rather than newer players, raising the bar for startups.
You need to have a business model that makes sense, and in my opinion, that's good. It's sort of survival of the fittest now, right? You cull out the ridiculous companies that probably shouldn't have existed in the first place, and now we are all thinking from the beginning, what is our business model? How do we go and make money?
Startups here, including Air Mule, a company that allows travelers to rent out their luggage space, says it's getting harder to secure funding.
We're finding that it's taking more meetings than it probably would have a few years ago to close this round.
Another factor all the folks here have been watching, this has been a slow year for IPOs. Through August 1st, it's been the slowest year since 2009. Jerry Huang, COO of Shanghai-based iTutor Group, which has a valuation greater than $1 billion, says his company sees the advantages of staying private longer.
There's an opportunity for a lot of these organizations to grow at a significantly fast pace by staying with private funding. So companies like Uber, even companies like ourselves, what we can do is really invest heavily on cutting-edge technology, solutions that really drive results.
But industry watchers say this IPO drought can't continue as investors are looking to cash out.
I think there's a lot of pressure to not go public right now, which is why you see these gigantic companies not going public. But I think that temperature is slowly changing, where the investors start saying, when do I get my money back, right? When is my return on my investment?
The mostly early stage companies here are far from an IPO, but eager to get on the radar of investors who come here to discover what could be the next generation of unicorns, or companies worth more than $1 billion. For Nightly Business Report, I'm Julia Boorstin in San Francisco.